Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, September the 18th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios. And therefore, what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Well, maybe not get it on with some economic data. The only thing we really got was the NAHB, which is the National Association of Home Builders index. It is independent small home builders, so they're saying what they feel the market is telling them, in a sense, how the market feels about or how they feel about the overall market, I should say. Anyway, it came in at 67, was supposed to be 66, so slightly better than expected there. As of that, we do have long-term purchases in treasuries later on today coming out. That's about it for today, though. The rest of the week, though, we do start getting better economic data. We get Great Britain CPI numbers. We have building permits here in the United States. We also get crude oil inventories. And then later on in the week, we start getting the flash, Flash CPI, I believe it is, on like Friday for PMI, the Purchasing Managers Index. So we get the flash manufacturing and services PMIs for Great Britain. That is the one that they most widely look at here in the United States. We look at the ISM for our PMI numbers, Purchasing Managers Index. Theirs is the flash. We also get flash estimates, but that's not the one that we looked at the most because of ISM is more robust and the one that is has the best data. All right, so that's later on in the week. Let's get on to the overall markets. We've got crude oil moving higher by about 78 cents. Not quite in the 70s right now, albeit it was earlier this morning. It was testing that handle. You know, we start seeing this $3+ gas. That's when the consumer starts pulling back on spending. We don't want to see that right now. It's a tax on the economy, you guys. We'd rather see it down here in the 60s where we have it below $3 a barrel, or $3 a gallon, I should say. Think about it. If gas is normally $30, $40 a barrel or a gallon, and then goes up to $50, $60, to fill up your tank, that extra $10, $20 to fill up your tank is not being spent in the economy. Now you save $10, $20, that's not very much. Well, think about it. That's $40 a week, $500 a year that you would be spending elsewhere in the economy. That creates the velocity of money. Those are the things I'm talking about when the government tries to do all these spending things and get people to work. It doesn't create that velocity of money like what we got with the tax breaks and money back there. Everybody spent their money differently. That's how we want the economy to move, is when you get that velocity of money. It doesn't take a lot to start speeding up that process. Anyway, crude still below 70. I'd like to see it stay below 70 for the near term anyway. Gold futures, bulls trying to keep that above 1200 as, with every last kick and scream and breath that they have, they're going to try and keep that above 1,200, and they're doing so far, despite it being down a little bit today. All right, Bitcoin is up $100 today after yesterday's big sell-off. Just not a whole lot of volume. You can see these volumes are just becoming seriously lethargic, where people aren't even paying attention to this market anymore, which is not boding well for the cryptocurrencies. All right, on to bonds. Just recently broke below this area here, which I believed was going to act as support. We have seriously, since the equities have really started gaining steam to the upside, have lost traction in the bonds. They are falling out of bed right now, as you can see, down almost a point on the day. Then let's look over at the equities. VIX coming off. That kind of gives us a heads up. It was in the 13s earlier today, but as these equities are continuing to rally, we are losing volatility out of the markets. And the Dow Jones Industrial Average up 135 points on the day, above yesterday's high. You know, yesterday, I'm not going to lie, I was ready to pull the ripcord on all of my long deltas in my portfolio. I held on. I thought, you know what, this is just a crazy sell-off. We're at near tops. We're going to get these volatile type moves, big swings as people try to cover profits and, you know, get in on the rally. So we're going to see a lot of these jukes back and forth. So I stayed in it, was waiting for today's open. If we got much of a confirmation to the downside, I was going to be pulling the ripcord. As you can see on the Dow Jones, because it's only open during the day session, we're not really getting this chart set up like we see in the NASDAQ, where it looked like it broke below the 61 Fibonacci and the 50-day moving average and then decided to pop back above that. This was actually a continuation of the sell-off that we saw yesterday afternoon across the board in equities. It continued into the late day. We'll see that in the 30-minute chart here coming up on the E-mini S&Ps. But then, for the most part, coming into today's session and after the economic data, we are just rallying almost unabated to the upside and near the highs of the day. Seeing this show up again in the E-mini S&Ps, up 17 points above yesterday's high, almost near, Friday's high, but on the highs of the day as we speak. This is the 30-minute chart I was talking about with the E-mini S&Ps. NASDAQ would reflect this as well, where yesterday's big sell-off, and then after the close, we kind of got some pinches down to the bottom. That's where it's showing up on this chart today, where we were below that area. But as you can see, when we come into the day session, all of those shorts getting flushed out coming into the day session, and then on the economic data, pretty much got a nice little rally to where we are now. Like I said, a couple of ticks off the highs of the day. So I don't expect this to be much different. This is kind of what I was expecting yesterday. That big sell-off late in the day, it just didn't seem like there was a whole lot of follow-through. It was a lack of participation more than anything, it being a Monday, and it just kind of fell out of bed. Nobody tried to stop it. Now today we're coming in and seeing this robustness to the upside, which is kind of what I'm expecting. I think the economic data coming out is pretty good. I think that these guys are doing very well. So all of that being said, a rising tide lifts all ships at this point. So I haven't actually done anything as of right now. I'm actually trying to get out of my Amazon trade, but it is about $1 away, despite the fact that it's coming in about $8 today, because Amazon's up quite big. Let's talk about Tesla. Tesla's all over the place. A lot of new automakers talking about their autos that are going to be electric. Saudi Arabia just invested in a competitor of Tesla. All of these things do not bode well right now for this company. Ticker symbol TSLA, I'm sure everybody already knows. But today, getting a nice big sell-off. That's helping me out of my long-term puts in there. If you remember, I don't have any calls against, my long-term puts. I don't have any calls against this right now. Although it might be a good time to start selling some calls again. I'll be looking at that today maybe with the volatility spiking up. And I still have this nice clean month to take advantage of. So if we were going to look at something like that here, I'll just pull up my other platform and we'll take a look at Tesla real quick just to see if we want to add on a trade. Kind of live. Let's look at TSLA. If I find something, I'll throw this into my margin account and in my IRA if it works for my IRA. But as of right now, we got 31 days to expiration. We got really high implied volatility. You can see the long-term puts in there. And let's look at this from selling some calls. I want to get it probably up above the 330s here. So that's that Fibonacci level. That's what I'm going to be looking at. Let's just make sure we have some deltas. See if that lines up with my deltas. I can even go higher. We can look at it all the way up to about the 16 delta right here. So this is the 35s, the 355s, sorry. So those are the puts I'm going to look to sell. 355s, that looks good to me. Probably don't want to do that big of a tranche right now because I want to do it a little bit less. So let's do about a 5 lot on this and confirm and send. Let's see how that works out. That's what I'm going to be looking to do. I'll try and chase that after this video's over, but that's what I may be looking to try and do, sell those 355 calls, which gets me above this Fibonacci value area high. I don't think it's going to be making that. So I got 2 resistance areas and the points of control. All of these things are going to be negative to the upside for Tesla. So I'm going to be playing that one out as well. Also, one other thing to note, they're going to start doing in-house fixes on their cars so that you don't have to go to the local automotive. One of the reasons that people are saying is because they want to keep that in-house as well. They don't want everybody knowing there's all these problems with the design of the car. That's a conspiracy theory, but you know what? Sometimes conspiracy theories come through. All right, Amazon, another one that I was worried about getting out, but today you can see we're up almost $50 on the day. I'm looking to get out of this one already. Yesterday I sold this trade in Amazon for, it was the October 1,725 puts in there. Yesterday's move didn't help, but today's move to the upside really is helping out quite a bit with it being up almost $50. So I sold those originally for $17.80. I'm looking to get out for $9 today. Like I said, I'm about $1 away, but if we continue to see upside in Amazon, another $5, $6, I could easily see that happening today. So I've got a working order in there to get out of that Amazon if it happens. Then let's talk about Apple. This was the one that got away. You know, I nailed this like it was a clinic. Probably should have gotten out a few days ago when I was about a nickel to 10 cents away from my 50% of max profit after only having that on for a couple of days. I waited it out and it went against me, obviously. Today we're getting a market rebound. It is a positive trade. I'm not losing money on it, but it's obviously not as good as it was. That being said, I think that the market action that we've seen across the board is very bullish. I'm going to stay in this Apple trade for right now. And then finally, I just threw up Nike here. All of, bad news is good advertising, is in a sense. Any news is good advertisement. So that's helping out Nike to the upside, a new all-time high here. Supposedly they are getting some major sales boosts off of the Colin Kaepernick thing. So that's about it. Just wanted to talk about a few things that I'm looking at. I don't have any trades on in Nike, but I am going to be looking at covering that Amazon. Apple's too far away, but got a working order in Tesla in my in this account, but I'm going to jump on my other accounts and start throwing those in there as well. All right. So that's all I've got for you today. Thursday's webinar is going to be on the long puts. When do we put on a long put? Yes, there is a certain time you should be using long strategies and a very, very inappropriate time to be using long puts and calls. And I'm going to be talking about all those rules in and around when those should be set up. Okay. So check it out at protraderstrategies.com. That's all I got for you. Other than that, if you can't take that, take it easy.